As the cryptocurrency landscape continues to evolve, recent events highlight a complex interplay between regulatory developments, high-profile legal cases, and a renewed political embrace of digital assets. The United States is witnessing a notable shift, with banks cautiously exploring cryptocurrency opportunities while awaiting clearer signals from regulators. Simultaneously, the controversial kidnapping case involving a prominent figure in the crypto community underscores the darker side of the industry, raising questions about security and investor confidence. On one hand, U.S. banks are beginning to venture into the cryptocurrency space, albeit tentatively. Financial institutions are eager for regulatory clarity that would allow them to offer more crypto-related services to clients. The growing interest comes amid rising pressure to integrate digital assets into traditional banking systems. According to industry experts, banks are tiptoeing into this realm, hoping for green lights from regulators that could pave the way for broader adoption. The cautious approach reflects a desire to navigate the complex regulatory environment while addressing concerns regarding volatility and security in the crypto market. In a more alarming development, a high-profile kidnapping case involving John Woeltz, dubbed the Crypto King of Kentucky, has captured headlines. Woeltz faces serious charges after allegedly torturing an Italian business partner in a bid to extract Bitcoin passwords. The victim, who endured 17 days of captivity, was reportedly subjected to horrific treatment, including physical violence and threats against his family. Eyewitness accounts and video footage of the victim's escape have drawn significant media attention, amplifying fears about safety in the cryptocurrency community. This incident not only highlights the potential for violence within the high-stakes world of crypto, but also raises urgent questions about the mental and physical security of investors and entrepreneurs in the sector. As these events unfold, political figures are also making their voices heard. Vice President JD Vance recently addressed the Bitcoin 2025 conference, proclaiming that the cryptocurrency industry has found a champion in the Trump administration. Vance emphasized the administration's commitment to easing regulations and promoting the growth of the sector, which he labeled as a hedge against bad policymaking. His remarks resonate with a growing sentiment among supporters of cryptocurrency who believe that digital assets represent a means of financial empowerment amidst economic uncertainty. Vance's speech also touched upon the proposed Genius Act aimed at creating a regulatory framework for stablecoins, a type of cryptocurrency tied to fiat currency. He assured attendees that stablecoins would not threaten the integrity of the U.S. dollar, a statement that may help alleviate concerns among traditional financial institutions wary of the implications of digital currencies. His call for increased political participation from the crypto community underscores the belief that the future of cryptocurrency regulation will rely heavily on advocacy and engagement from industry stakeholders. While the embrace of cryptocurrency by political leaders and financial institutions seems to be growing, the juxtaposition of such developments with violent incidents like the Woeltz case casts a shadow over the industry. The ongoing legal proceedings and discussions surrounding safety and regulation will likely influence public perception and investor confidence in cryptocurrencies. As the landscape continues to shift, industry insiders are closely monitoring how regulatory frameworks will evolve, particularly in the context of the Biden administration's previous stance on cryptocurrency. The balance between innovation and security remains delicate, and the path forward will require careful navigation by all involved. Looking ahead, it is clear that the intersection of cryptocurrency with finance and politics will continue to shape the future of this dynamic industry, making it imperative for stakeholders to remain engaged and informed. In an era where the intersection of technology and politics is becoming increasingly pivotal, U.S. Vice President JD Vance delivered a compelling keynote address at the Bitcoin 2025 conference in Las Vegas, urging the cryptocurrency community to engage more deeply in political affairs. Vance's message was clear: the future of Bitcoin and the broader digital finance landscape is intricately linked to the political decisions made today. During his address, Vance emphasized the strategic importance of Bitcoin. asserting that the United States must maintain its leadership in the crypto sector to remain competitive on the global stage. What happens in the world of politics, what happens in the world of bureaucracy will affect even the most transformational and valuable technologies if we do not make the right decisions, he stated. He encouraged attendees to carry the momentum of their political involvement from the previous election cycle into future engagements, highlighting that the cryptocurrency community cannot afford to be passive in the face of evolving regulatory landscapes. Vance's remarks come at a time when Bitcoin is increasingly recognized as a legitimate asset class, gaining traction among institutional investors and becoming a focal point in macroeconomic discussions. Analysts suggest that there is a growing race among nation-states to adopt Bitcoin, driven by a fear of missing out on its potential benefits. This urgency was notably intensified by former President Donald Trump's pro-crypto position, which included proposals for a Bitcoin strategic reserve and the establishment of a crypto advisory council. The implications of these developments are significant as other governments look to the U.S. for guidance on cryptocurrency regulations. For instance, India's government is currently re-evaluating its crypto policies in light of changes in the U.S. regulatory environment, with Economic Affairs Secretary Ajay Seth acknowledging that digital assets do not care about borders. This potential policy shift underscores the global nature of cryptocurrency and the interconnectedness of national responses to its rise. In parallel with these political developments, the cryptocurrency market continues to evolve with notable corporate moves. GameStop, the iconic video game retailer, recently disclosed its acquisition of 4,710 Bitcoin, valued at over $500 million. This marks GameStop's initial foray into the cryptocurrency space following a revision of its investment policy to include Bitcoin as a treasury reserve asset. The company aims to leverage its recent private offering to bolster its cash reserves and diversify its investment strategy. As GameStop navigates its challenges, this pivot towards cryptocurrency reflects a broader trend of traditional companies exploring digital assets as a means of enhancing their financial resilience. Moreover, on the consumer front, Ledger, a prominent cryptocurrency hardware wallet firm, announced the launch of its Crypto Life Visa card in the U.S. The card will offer users 1% cashback in Bitcoin or USDC on purchases and will allow direct paycheck deposits into the on-chain account. This initiative signifies a growing acceptance of cryptocurrencies in everyday transactions, providing users with tangible benefits for their digital asset holdings. As the cryptocurrency landscape continues to grow and evolve, the interplay between politics, corporate strategies, and consumer adoption will be crucial in shaping its trajectory. The call to action from Vice President Vance serves as a reminder of the importance of political engagement in the face of rapid technological advancements. Looking ahead, the coming years will likely see further integration of cryptocurrency into mainstream finance, with ongoing discussions around regulation and adoption paving the way for a more established digital economy. At the Bitcoin 2025 conference in Las Vegas, Vice President JD Vance declared that cryptocurrency has found a champion in the White House, a significant endorsement from a high-ranking official in the Trump administration. Vance's remarks come at a time when the cryptocurrency landscape is experiencing substantial changes, particularly under the influence of the current administration, which has actively sought to promote the integration of digital assets into the mainstream economy. Vance addressed an enthusiastic crowd, asserting, "With President Trump, crypto finally has a champion and an ally in the White House." This statement reflects a broader shift in the Trump administration's posture towards cryptocurrency, which has evolved from skepticism during the earlier years of Trump's political career to enthusiastic support. The administration aims to reduce regulatory burdens, thereby fostering growth within the cryptocurrency sector, a move that aligns with Trump's broader campaign promises to position the U.S. as a global leader in digital assets. A longtime proponent of cryptocurrencies, Vance revealed in his speech that he personally holds significant investments in Bitcoin, with disclosures indicating an ownership range of $250,000 to $500,000. He reinforced the idea that cryptocurrencies, particularly Bitcoin, are now integral components of the American economy, stating, We want our fellow Americans to know that crypto and digital assets are here to stay. Vance emphasized that cryptocurrencies serve as a hedge against inflation and poor policymaking, a sentiment that resonates with many who have watched their savings erode due to rising costs. During his address, Vance also urged Congress to pass the Genius Act legislation intended to establish a regulatory framework for stablecoins, digital currencies pegged to traditional assets like the US dollar. He argued that stablecoins should be viewed as an enhancement to the financial system rather than a threat, declaring in this administration, "We do not think that stablecoins threaten the integrity of the United States dollar. We view them as a force multiplier of our economic might." Vance's speech was not just an endorsement of cryptocurrencies, it was a call to action for industry stakeholders to engage more actively in the political process. He warned that without political involvement, the interests of the cryptocurrency community could be overlooked. "Unless you guys get involved in politics, politics is going to ignore this industry," he cautioned, urging attendees to carry forward their political engagement from the previous election cycle into future electoral efforts. The Bitcoin 2025 conference also featured other prominent Trump supporters, including Donald Trump Jr. and Eric Trump, who spoke on emerging Bitcoin business models. This gathering of influential figures highlights the Trump administration's deepening ties with the cryptocurrency sector, which has grown increasingly influential in Washington. The price of Bitcoin has surged nearly 60% in the last year, reflecting a renewed interest and investment in digital assets. In a related move, the Trump administration has recently rescinded Biden-era guidance that advised caution in allowing cryptocurrencies and related digital assets in 401k plans. This decision marks a significant policy shift as it opens the door for employers to include cryptocurrencies in retirement plans without the stringent oversight previously recommended. Critics, however, warn that this could expose investors to significant risks given the volatile nature of cryptocurrencies. As the Trump administration continues to navigate the complexities of cryptocurrency regulation, the implications for the market and investors are profound. With Trump pledging to make the U.S. the crypto capital of the world, the future landscape of cryptocurrency in America is poised for further transformation. The ongoing dialogue within the political arena reinforces the notion that cryptocurrencies are not merely speculative assets but are increasingly being recognized as vital components of the global financial system. Looking ahead, the intersection of cryptocurrency and politics is likely to intensify, especially as regulatory frameworks evolve and more stakeholders advocate for their interests. The developments from the Bitcoin 2025 conference signal a pivotal moment for the cryptocurrency industry, one that could reshape its role in the economy and governance in the years to come. As the cryptocurrency market continues to evolve, recent analyses suggest that Bitcoin BTC and Ethereum ETH are poised for another significant rally. Jag Kuhner, the head of derivatives at Bitfinex, emphasizes the influence of the current macroeconomic environment on the prices of these leading digital assets. In a note shared on May 28, Kuhner highlighted that traders are closely monitoring Federal Reserve guidance and consumer spending data, as these factors could significantly impact market dynamics. The Federal Reserve faces mounting pressure from potential inflationary effects of tariffs, which Kuhner believes will lead to a stabilization of interest rates. He pointed out that the forthcoming core personal consumption expenditures (PCE) data is crucial, stating the core PCE data on Friday will be the most binary macro event. Market pricing expects stability. Any downside surprise below 2.6% year-over-year core will trigger a compression in real yields and dollar softness, catalyzing capital back into crypto. Should the dollar weaken, Bitcoin may emerge as a preferred asset for wealth preservation, particularly as institutional inflows remain robust, with $1 billion net inflows into Bitcoin and Ethereum exchange-traded funds ETFs reported for the week ending May 25. Kuhner also noted that Ethereum in particular is driving the altcoin rally, with ETH gaining 6% against BTC from recent lows. He attributes this growth not to retail demand but to increasing institutional interest. This is the beginning of what might become phase 3 of the crypto bull cycle, where BTC strength stabilizes, ETH accelerates, and capital spreads out across selective altcoins, Kuna remarked, underlining the potential for a bullish phase ahead. In addition to these market movements, SharpLink Gaming has made headlines by raising $425 million through a private placement to position Ethereum as its primary treasury reserve asset. This groundbreaking initiative, led by ConsenSys and other notable crypto investors, marks the first instance of a Nasdaq-listed company establishing an ETH treasury. Following the announcement, SharpLink's stock price surged by over 400%, and the firm plans to acquire approximately 120,000 ETH, positioning itself as a public proxy for Ethereum. Meanwhile, Ethereum's price remains a topic of debate among analysts, especially following the recent transfer of 97,000 ETH by a dormant whale, which has reignited speculation about the asset's potential to reach the $10,000 mark. Although current trading levels are relatively modest, with ETH priced around $2,633, analysts are optimistic about a potential breakout if buying momentum persists. Michael van de Poppy highlights the importance of maintaining support above the $2,600 level, suggesting that a move towards $3,000 could be within reach if favorable conditions align. As the crypto landscape evolves, new projects like JetBolt are capturing attention with innovative offerings such as zero-gas technology and interactive staking models. With over 355 million tokens sold in their pre-sale, JetBolt represents a fresh wave of excitement in the Web3 space, showcasing the continuous innovation that characterizes the cryptocurrency market. In tandem with these developments, the insurance sector is also adapting to the growing needs of crypto stakeholders. Recent advancements in insurance products for Ethereum validators may pave the way for broader institutional adoption. Insurance now covers not just slashing losses but also guarantees a minimum yield for stackers, reflecting a shift towards more secure participation in crypto finance. As the market braces for potential rallies driven by macroeconomic factors and innovative initiatives, the future of Bitcoin and Ethereum looks promising. With institutional interest solidifying and new projects emerging, the cryptocurrency space is poised for transformative growth in the coming months, making it an exciting time for investors and enthusiasts alike. In a significant turn of events for the cryptocurrency landscape, recent developments have caught the attention of investors, analysts, and tech enthusiasts alike. As Bitcoin continues to flirt with the $108,000 mark, the broader crypto market is experiencing both bullish trends and alarming security breaches. The juxtaposition of soaring prices alongside emerging threats paints a complex picture of an industry at a crossroads. On one hand, the latest report from Bloomberg highlights an optimistic perspective on the future of cryptocurrencies, suggesting a renewed wave of enthusiasm among investors. This optimism is fueled by a confluence of factors, including increasing institutional adoption and technological advancements within the blockchain space. As the market matures, analysts believe that cryptocurrencies may be poised for a robust resurgence, with Bitcoin leading the charge. We are witnessing a pivotal moment where cryptocurrencies are gaining acceptance as legitimate financial assets, states a Bloomberg analyst, emphasizing the importance of regulatory clarity and technological innovation. However, this bullish outlook is tempered by troubling cybersecurity news. CoinDesk has reported the discovery of a self-spreading malware targeting the privacy-focused cryptocurrency Daro. This sophisticated attack exploits unsecured Docker infrastructure, turning compromised servers into a decentralized cryptojacking network. Kaspersky's cybersecurity experts revealed that this malware operates without a central command, making it particularly challenging to contain. The implications of such a widespread attack are significant, as it not only jeopardizes individual users but also undermines confidence in privacy coins, warns Shourya Malva, a cybersecurity analyst. In the broader context of cryptocurrency usage, innovative collaborations are emerging. FIFA has announced a partnership with Avalanche to develop its own blockchain, aiming to enhance its Web3 ambitions. This move signifies the growing intersection of sports and blockchain technology, with FIFA building on its previous foray into NFTs during the Qatar World Cup. Meanwhile, Square is piloting a real-time Bitcoin payment system at the Bitcoin 2025 conference in Las Vegas, showcasing the ongoing evolution of payment systems within the cryptocurrency ecosystem. In terms of market performance, major cryptocurrencies are facing volatility. Bitcoin's recent uptick is juxtaposed with declines in other significant assets like Solana and Dogecoin. As analysts dissect these trends, they note that fluctuations often correlate with external market forces, including tech stock performances and regulatory news. The U.S. Securities and Exchange Commission has initiated a review of a proposed spot ETF for XRP, which could pave the way for broader acceptance of cryptocurrency investment vehicles. As the Senate moves closer to passing the Genius Act aimed at regulating stablecoins, the outcome could have far-reaching implications for the crypto market. Senator Cynthia Lummis, a key advocate for the bill, remarked on the challenges faced during the legislative process, highlighting the ongoing debate surrounding cryptocurrency regulation. "This has been an incredibly hard-fought battle, but it's crucial for the future of digital assets," she stated during a recent panel discussion. Looking ahead, the cryptocurrency landscape is poised for further developments as it grapples with the dual challenges of security and regulation. With increasing institutional interest and the integration of blockchain technology across various sectors, the potential for growth remains substantial. However, as cybersecurity threats evolve and regulatory frameworks are established, stakeholders must navigate these complexities to harness the full potential of cryptocurrencies and blockchain technology. The coming months will be pivotal as the industry seeks to balance innovation with security and compliance, ultimately shaping the future trajectory of the cryptocurrency market.